All right, what up? It's Ruben from TGE, and I want to share with you today my top oil stock watch list that we're actually currently in. But before I do that, I want to share with you my year-to-date performance, which we're up at 73%. I feel like just a couple of weeks ago, we were stuck around 56, 54%, and now with SBET on the crazy rise, and so was some other ones, we hit 73% pretty fast on the main fund account. And then I wanted to share with you also some of the wins here. Okay, so Agent had a green day. He shared with this yesterday in the group. He said, "Thank you, Ruben, for teaching me for the strategies. I was able to recover my account from massive blunders." You can see here, you got like 130%, 292%, 103%, 148, like crazy wins. That's crazy what you could do once you have like a well structured great risk versus reward ratio strategy. And today was actually kind of a flat day for us. So we had one winner, two losers. We still have a bunch of other positions that is holding the account up. We took our profits here on Archer for a 3.39% gain on the shares. We had a loss on PDD for 9% on the option loss, which is really good because when you can have when you can cut your losers really fast and you let your winners be really huge, the winners will always make up and give you more profit than when you actually like initially started with, right? SBET shares, we had a loss of 4%. So overall flat day on the account. But most importantly about the losers is that it was all part of the plan, right? So all these two losers, it doesn't affect me. It doesn't phase me at all. It's always part of the plan. So we just move on to the next thing. That's how you'll be able to get a 73% return just because you can stay systematic and emotionless to the losers. Just cut them off, move on to the next one. All right, let me share with you the stock that I actually like. Before I do that, I want to share with you SPY. You can see SPY has been making higher highs here. It's been a tricky market because the entire market here has been this like slow grind up, but these sharp sell offs. You can see here like on August 7th, choppy day on August 11th. We had massive red days here on July 31st, August 1st, and then even August 5th. We had green day and then choppy day on green or red day on green on August 5th, right? So it's slow, it's painful, but this is just what happens when you are in a stable market. You know, a lot of the teammates are like, "Are we ready to short? Are we ready to short?" And I'm like, "We're not ready to short at all." Let's take a look at here at SPY here. Okay, but overall, the market is not ready to be shorted at all because we are in a certain level where the market makers are going to add stability to this market. They're going to sell. They're going to sell on the way up, and then they're going to buy on the way down. And so that causes these really tight ranges. Like we don't have very consecutive back-to-back red days, except only on these 2 days. But even this day on July 30th, you can see here that we were up and then down and then back up. Like it's really hard to short anything. If anything, this is more of a buy the dip type of market. Okay. And that's what we did with Apple. And that's how we were able to get about 130% on the return there. Um, so let's take a look at this gamma profile chart. Now, what I love about this chart in Gextron, okay, is that it shows you here the flip point. So this flip point is like, hey, Gextron is telling you if the market goes below 640 as of right now, we can see some serious volatile moments. Okay, but we've been above this gamma flip point. As long as we're above it, then we're going to see a lot of stability. But they're going to be like these short, massive drops. But then they're going to get all the selling is going to get eaten up, and people are going to be buying more and more market participants, and that's going to create a feedback also to market makers and so on. So when I look at this, it just tells me like, hey, this is just a buy the dip moment, right? So buying longs and continue to buy the dip is the best way to go about this market at the moment. Okay. Now it does have like a rubber band. I do foresee us hitting 650 and then potentially getting a drawback sometime in September. Normally September, seasonality wise, it's a market rotation. So we'll see other stocks perform better and so on. And so this is where oil comes into play, okay? Because we want to make sure that we capture the oil play. Now, a lot of the levels I'm going to show you here is from Gacktron again. This is how I get my support and resistance levels for let me see if I can make this smaller, for these like ZOM and everything. So you can see here, like we have 120 here on for max reward. This is going to be a big resistance area, but you can see we have very large levels of resistance. The taller the bar, relative to the security, the bigger the resistance. So in this case, we're hovering over 107. If we go look at the chart for ZOM here on TradingView, you can see here that we're barely hovering over 107. But here's the thing. We're starting to get into a bullish transition from a bearish zone into a bullish transition here with ZOM, with Exxon. And so what I foresee this happening, as long as we can hold this 107, and unless the data does not change, and what I mean by data is Gacktron, we can potentially see 110. And then if we get past 110, we'll definitely be able to have a clear shot to 115 and maybe 120. Maybe. That's hopeful. Now, the reason I say hopeful is because stocks move in quarterly cycles. And so what I mean by that is by earnings date, like the day after earnings to the next earnings, right? And based on the current data, from here until October 24th, ZOM actually has about a 9% or a 9.55 point move, right? So that's about an 8, almost 9% move as of where the stock is currently at. Now, this data is again received from Gacktron here, and so I'm going to show you here. It's really simple. I just go to my price targets here, and I go to October because it's the closest expiration. And here it is. As of right now, it's 116.64. And this also takes into consideration theta, right? As we get closer to an expiration, theta is going to start contracting. It's going to start contracting implied volatility. Nonetheless, you don't got to worry about that because Gacktron just tells me, hey, it's going to be about 116, right? So what we did is that we grabbed 115 calls for, I believe, let me take a look at my Telegram here, for January. So we got plenty of time in here, right? Because the quarter ends for ZOM here around October. So we have, what is it? October, November, December, and then January. So we have about like 2.5 months extra to let this thing play out. So if it does, we can hit this and potentially even hit about over 100% return by our runners. And so here's the game plan, and here are the resistance levels. First, support zone is right here at 107 for ZOM. As long as we're above 107, I like going long as of right now. And this has about a risk reward ratio of 11.65. So it's greater than 1, greater than 3, which is really, really good. Okay. So that 9% loss that I had on PDD, this will make up for it and then more, like probably 2 times more. So it doesn't really matter. Now, when it comes to this, as long as price can hold above this, the first area of resistance is going to be 110. Now, it's possible that we may stall and reject, or it's possible that it's going to stall and then go for a breakout here. Okay, that's going to be the key right there. 110 is going to be the key. Past 110, we have a clear shot to 115. Okay, and then potentially probably tapping into our onto our quarterly expected target, our price target of 116.07. Actually, I think this even went up higher because it says 1164, and I'm actually going to update this line right here because I have 116.07. So I'm just going to update that, and that's it. So wonderful, right? That puts us about 1 point inside the money, right? So that's really good for our contracts. That turns our contracts from out of the money into the money, and we'll make a lot of cash from that delta and that gamma. So I don't have to worry about that. Awesome. Now, the only way I get phased out of this trade is if it crosses below, if price action gets below P trend level, which is this 107, because then it's going to start entering potentially into a bearish phase. And I don't want to be in a long position when we're actually going to start going into when price is actually kind of weak. Okay. And so with ZOM, that's the game plan. It doesn't change, right? Okay, so that's that. I don't think I have to add anything else to that. Now, is there anything else here that I need to talk about? I don't think so. I think this is pretty much it. Oh, one more thing. Yeah. So the thing with these levels is that 107. Okay, the thing with Gacktron and why it's so powerful is because, as you see, it's grabbing the option market all day, every day. Okay, and so it's constantly updating. Actually, I actually misread this. It's not even 107. It's 106. P-Trans is 106. Wonderful. So as long as we hold 106, we're good. Why 106? Because it's the first positive bar, and every other bar to the right for the next three bars are positive. So this is positive, 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 positive. Wonderful. Now the reason this is really important is because if data changes as Gextron is receiving all this data and recomputing it, it's gonna update me when it's the next bar. All I have to worry about is like, okay, where's the first positive transition bar? Because that's the new transition of when it becomes bullish, right? If we get below it, I need to get out of my trade. Period. Now let's take a look at Oxy because Oxy is another trade that I want to take a look at. Okay, so Oxy here is one that we're in, but I think we're currently down about a few percentage points. We might be at break even at this point. Here are the levels for Oxy. So at the moment, I haven't changed this since yesterday because we got in yesterday or just a couple of days ago, I think, August 12th. P-Trans is 44, max reward is 45. Let's see if that's changed. So right now it's 44. You can see the tallest positive bar is 45, making that max reward. And past that, we have a nice clear shot to 47.5, which I think that's what I have here. Now, here's the thing with Oxy, okay? Oxy has been, it's still in a downtrend, but as of right now, it is kind of consolidating for the last few days here, okay? You can see the consolidation is right here in this box. Okay, so what we want is a breakout out of this and trying to go into these gap fills right here, which is like all the way over here and here. And so that's why there's not a lot of resistance in between here. The resistance starts here because this is where there was a lot of liquidity. Okay, a lot of traders are talking about liquidity and like, where's liquidity? Liquidity is what Gextron is showing you. Wherever the tallest bars, whether they're negative bars or positive bars, that's where the most price action and the most reaction is going to be for that given security. Okay, so as of right now, the liquidity areas are going to be 45, 44, and 47.5, and then 50. Now, you can see here I have this QEM label just like I did with ZOM. It's the same thing, okay? It's the same thing. This is where, as of right now, they posted earnings here. Their next earnings date is November 18th. So from here until November 18th, Oxy can potentially see about a 13% move to the upside, which is $5.87, making it 50.28. Okay. Now this makes the risk versus reward extremely well. Okay. Because you can see here, I'm willing to lose 2% on the stock, right? But I'm able to, if this is 2%, this is going to be a 13% upside move, right? That's about an 8 times, maybe 9 times greater than what the actual stock is, the loss is, right? So this makes it a 1 to 5, 5.99 risk reward ratio, which is really, really good. The minimum that we always try to shoot for inside the Telegram group is 3 RVR, okay? So a ratio of 3. That means we could lose like 33% of the time, but still come out break even because the winners will always make up for the losers, okay? And so here are the levels. Again, 44, 45, 47.5, and 50. Okay, now again, just like I said with ZOM, these levels can change throughout the day. It could change later today. It can change tomorrow. It can change the next week. We don't know when this is going to hit. All I know is that we need to get enough time in the contracts, which we got January contracts, to be able to hit our targets, right? Because this is about a 3-month span. So in our eyes, we're always thinking about 2 to 4 weeks, maybe let's just say 1 to 2 months of holding time. It doesn't mean you can't do it tomorrow or that this can't achieve it in the next week or two. But that's our game plan. Like, this is going to take a little bit of time, so we're going to grab more time to let this thing roll, right? Because again, we're playing quarterly moves. We're not trying to play just like pennies, okay? So that's the game plan for Oxy. And I think these are really good tickers going into September, okay? So whether you want to do calls, options, or shares, I think this might be a really good idea to be able to hedge some of your other positions like tech and whatever other sectors may have a drawdown during September. All right. That's it for this video. That's the breakdown. You definitely want to keep an eye out on oil stocks, as they can have a huge run up here in the upcoming month. And it's definitely something that can make you a lot of money. If you have any questions, drop them down below, and I'll put a couple links in the description box if you want to trade with us and so on. All right, I'll see you in the next one.